Welcome to Gradient's weekly business roundup. Today's episode will cover the following topics.
Sri Lanka's public and external finances remain vulnerable as $26 billion in sovereign foreign currency obligations are due between now and 2026 against lower foreign exchange reserves. Such sentiment was expressed by Sagarika Chandra of Fitch Ratings, who noted, quote, Sri Lanka's public and external finances remain fragile as reflected in our CCC rating. A rating at this level indicates substantial credit risk, with default a real possibility. She also noted that Sri Lanka could remain current on obligations to at least mid-2022 with project financing and bilateral and multilateral inflows and are likely to roll over maturing SLDBs. On the central bank's 6-month roadmap, she said, financing plans contain limited details, including the sources and timelines of financing arrangements. Fitch revised down Sri Lanka's growth forecast for 2021 to 3.3% from 3.8%. Dr. Chandranath Amarasekara at the central bank stated that private sector credit growth is likely to reach Rs 850 billion in 2021, a 14% year-on-year increase. Year-to-date, ending August 2021, private sector credit grew Rs 625 billion, supported by Rs 134.1 billion in August 2021, the highest for a month in 3 years. Manufacturing Purchasing Managers Index, known as PMI, increased to 54.3 in September 2021, up 20% on a month-on-month basis, whilst the Services PMI also rose 13% month-on-month to 52.2. Manufacturing PMI growth was driven by new manufacturing orders of textile and wearing apparel, affected by normalization of major apparel export economies and manufacture of food and beverages. However, some food and beverage sector respondents highlighted lower availability of raw materials amid rising costs of imports as a key concern. Imports in August 2021 were $1.68 billion, up 31% year-on-year, while exports grew to $1.1 billion, resulting in a negative trade balance of $586 million. Imports were driven by all three major categories, namely consumer, intermediate, and investment goods. Fuel costs rose to $1.01 billion in August 2021, compared to $791.3 million in August 2020, as import cost of a crude oil barrel was $74.88 versus $47.74 a year earlier. And in other news, Central Bank Governor Ajit Nivard Cabral said that the central bank expects to forward a proposal requesting the government to explore the possibility of importing vehicles paid via foreign exchange. The IMF estimates Sri Lanka's GDP to reach $101.4 billion in 2025, followed by Nepal and Maldives. Moreover, Bangladesh is forecast to grow to $516 billion in 2024 to 2025, surpassing Denmark, Singapore, and Hong Kong. Amid the chemical fertilizer ban, the government decided to import nano-nitrogen liquid fertilizer from India. Agriculture Secretary Udit K. Jayasinghe stated that around 2.2 million litres of nano-nitrogen liquid fertilizer is needed for paddy and maize. The all-share price index at the Colombo Stock Exchange ended the week to 21st October at 9,881.50 points, up by 2.7% from a week earlier. Foreign selling persisted, with net foreign outflow amounting to Rs 153 million during the week and reaching Rs 45 billion year-to-date. Capital Alliance is to enter the merchant banking sector in Bangladesh in partnership with Bangladesh's Beta One Investments Limited. Expac Corrugated Cartons admitted that it is not the market leader after Lanka Corrugated Carton Manufacturers Association pointed out what it alleged as misleading information in the Expac's prospectus for the Rs 700 million IPO.
And that's a wrap for today. Hope you have a great day. Stay safe and stay healthy.